If your parents are coming at you all the time, the numbers are why they are telling you all of that, because college is definitely not cheap. Hi, my name is Jazz. I'm a personal finance and lifestyle blogger working in the finance industry by day. Welcome to my channel, where I talk about all things money management to living your best life without needing a fortune to do it. I just want to apologize in advance. There's lots of background noise, like birds chirping, planes flying in the sky, and just my home in general, but that just comes with the environment that I live in, so you will hear it in future videos, just to let you know. Moving on, in this video, as you can tell from the title, I'm going to be talking about 11 money tips that you need to know. And these are tips that I wish I knew before graduating high school, and I've learned throughout my college years. If you are a high school senior, congratulations! Graduation is right around the corner, and I am sure you're excited, but also nervous because there's a lot to life that you don't know about. And one of them is probably money. If I could go back to my old high school self, I would tell her so many personal finance things that I've learned the hard way. Since I can't do that, I'm gonna do that for you here in this video. This is in no particular order, but trust me, this is all super important and will contribute to your success in the long run. So grab your phone, grab a journal or whatever it may be, and jot down some notes. First things first, we all know college is super expensive, so find other ways to pay for it. The average yearly cost of tuition in the US is between $11,610 to $43,350, and upon earning a bachelor's degree, which is 4 years worth of college, students graduate with an average of $31,960 to $47,730 in student loan debt. These are just averages of tuition, not room and board, not books and materials and fees. This is strictly just how much you are paying for your classes. With that said, you are actually looking to pay a lot more than the numbers I just gave you. So if your parents are coming at you all the time, telling you to apply for scholarships, get good grades, and all that kind of stuff, the numbers are why they are telling you all of that, because college is definitely not cheap. That's why it's so important to find other ways to pay for college, not just through FAFSA or scholarships offered by your school, but you can also apply to scholarships around your community. You can even apply to work-study programs, and if your employer offers it, you can apply for education assistance. So education assistance, they can reimburse you or pay for your school entirely. Number 2, knowing how to budget is an essential skill to have. The secret to financial success isn't so much about how much money you make, rather it's how you manage your money and how much of it you keep. Building the habit of managing your money wisely at a young age could actually help the future you from facing financial hardships unprepared. And trust me, the future you will definitely thank you. There's many different ways you can budget your money. You can use planners, apps, and my personal favorite are spreadsheets. You can go to my shop, lovejazzjoy.store, to get a very simple and beginner-friendly budget annual spreadsheet. I do have an article about how to budget step by step, and I will link that down below too. Number 3, paying yourself first is more important than treating yourself first. And no, they are not the same. So treating yourself would essentially be rewarding yourself with the purchase, whereas paying yourself first means setting aside a portion of your earned income for the future you, whatever that you want or wants to save money for. I can't tell you what to do with your money. You can definitely spend it as you please, but what I can tell you is that the future you is just as deserving as the current you. The easiest, most painless way to pay yourself first is by setting up automatic transfers or direct deposits straight into your savings account as soon as you get paid. First, you will want to review your budget, then calculate your discretionary income. Your goal is to save at least 20% of the money you have left after bills and necessities. If you want to save more than that, that's even better. Number 4, autopay is your best friend. I can attest that autopay and reviewing your budget routinely can prevent you from missing any of your payments. Because of these habits, I have 0 delinquencies and 0 late payments throughout my 7 years of credit history. Setting up autopay for all of your bills, subscriptions, and any other regular expenses will make your life so much easier. It is also good practice to set up recurring transfers to allocate your money into different accounts. Doing so will not only keep you financially organized, but it will also assist you in staying within your budget. For instance, you can have one checking account just for your groceries, another checking account strictly for your personal spendings, and then a high yield savings account for your emergency savings. If you want to know how to make your hardworking money work for you, it is actually so much easier than you think, and that is number 5, taking advantage of compound interest. I'm not against cash envelope stuffing or binder stuffing or anything along those lines. I'm really not. If it works for you, then it works for you. But I can say that cash just lying around will lose money over time. And that's because we live in an economy where inflation exists. And in the US, the inflation rate on average per year is 3%. So that means every dollar that isn't earning interest or growing in some way is actually losing about 3% of its purchasing power per year, which is why you should take advantage of compound interest. Put your money in a high yield savings account or a certificate of deposit where you're going to be earning at least 3+%. That's just the average, but definitely do your own research because each bank offers different rates. This isn't one of the 11 points, but I just want to put it out there that another way to make your hardworking money work for you is by investing. Just in reference to the S&P 500, it has delivered an average annual nominal return of 10%, and that is within the past 100 years or so. Of course, the market always fluctuates, but I would say investing is such an amazing way and will always be an amazing way to build wealth over time and beat inflation. Point number 6, create short-term and long-term goals. These goals can range from 6 months to 10 plus years. It just depends, of course, on the goal that you set for yourself, and it may change over time, but that's okay. It's just important to have a list so that you can focus on your financial journey. An example of a short-term goal would be saving $500 for Christmas, and then an example for a long-term goal would be saving $20,000+ for down payment of a house. The most important thing to creating financial goals is, of course, making them realistic and manageable. Yes, you can for sure dream big, but also have actionable steps to achieve that dream. Position yourself for success, but also stay flexible enough to adjust your goals when necessary. Number 7, you need to start building credit. Now, credit is such a huge part of your financial journey. I was blessed enough at a young age to start working on this because my mom was financially literate. Thank you, Mom. And she opened up a bank account for me when I was in high school. This allowed me to build a solid relationship with the bank, so when it came time for me to apply for a car loan with a stable income on my own, I was able to get approved. Not everyone started off this way, but even if so, approval is never guaranteed, especially with no credit history. So the next big thing would be to apply for a secured credit card on your own or apply for a loan with the co-signer. A secured card is a credit card that requires money up front and it may be deposited into your savings account, and if approved, it will be used as collateral for your card. Secured cards are a great option to build or rebuild your credit. It is important to make payments on time so that it can actually help your credit score, not hurt it. Building and maintaining good credit is so important because you will need it to rent out a place, to purchase a home, apply for a credit card, apply for a loan. Having a good credit score will show banks, lenders, and rental properties that you are financially responsible and trustworthy, which means you are more likely to get approved. Number 8, it is so easy to rack up debt, especially through student loans. Although a large portion of a student's debt is due to student loans, young adults actually fall into the habit of spending so much on their credit card that it can be difficult to pay off within a reasonable time. Do your best to walk away from high interest loans and high interest credit cards. Yes, they are so enticing, especially when you need a car or money to spend, but trust me, these are much harder to pay off. Anything over 7% will eat up your wallet for a very long time, and that doesn't even include the student debt that you still have to pay for. Your federal student loans, even if they are deferred, you are still accruing interest on the unsubsidized loans while you are still in school. If you are working while going to school, I highly recommend to start paying towards your student loans. Don't wait until after graduation because you will notice such a big difference between what you borrowed at first and how much you have at the end. Number 9, your young age is a superpower. You've probably heard so many finance gurus out there say the best time to start investing was yesterday. The second best time is today. This couldn't be more true, so I'm saying that to you too. The earlier you start investing, the more wealth you can build. More time in the market will always beat finding the right time to start investing into the market. One way you can invest is through your employer by contributing to your 401k, 403b, or your TSP. And if your employer offers a contribution match, take advantage of 100% of it because it is free money. Another way to start investing is by opening up a tax-advantaged account with a brokerage like Fidelity or Vanguard. Open up a Roth IRA and contribute as much as you can and start investing in the right assets based on your age, risk tolerance, and financial goals. Number 10, be picky with who you work for. Your time and your energy is so valuable. Don't settle for just getting paid. Unless it's for a paid internship or you really feel like you're going to get a lot of value out of working for this company, then by all means. Other than that, it would be ideal to work for a company that offers great benefits like 401k, employer match, medical, dental, and more. It's not just about making money today. It's also about long-term stability and making sure that your hard work secures your financial future. Last point, number 11, get the most out of filing your taxes while you are employed and a student. If you are working and going to school at the same time, talk to your parents about allowing you to claim yourself on your own taxes. You might get a larger refund by doing so, which is always a plus. Remember when I said to start paying towards your student loans because debt accrues quickly? Well, paying towards your student loans can also increase your tax refund. If you make payments towards your student loans, your lender will provide you a 1098-E during tax season. You can then file it as a deductible and maximize your tax benefits. To further maximize your tax benefits as a student, track the cost of all of your school books and supplies. And yes, you can actually include your laptop if you do use 100% of it for school. Be sure to keep your receipts for all of your items, whether that be digitally or physically. This is not tax advice though, this is from my own experience, so please do your own research or talk to a tax expert. That was everything. We have made it to the end. Thank you for sticking through. Again, all of these points are essential to setting yourself up for financial success. There's a lot more to learn, but I hope this gives you a solid foundation to build on. I didn't get to go over the many resources available for each of these talking points, but I do have related articles and an article for this specific video, which I will link all down below. If you want more personal finance tips as a student, young adult, or just in general, give a like or drop a comment down below. Thank you for watching, have a wonderful day, and see you in the next video.